Okay, recording from Friday the 9th, 69. SPY SP 500, still in long-term uptrend. The recent trend action is we're going sideways at the all-time high for about 5 days. Tested up and sharply rejected down. Touched the prior support level, but now we're kind of back in this range. But definitely, failure test from the all-time high. Bull market's still intact, but this, it could be a potential piece of weakness going forward in the future. I placed two trades on Friday. BlackBerry being one. What was my setup? Excuse me. In an uptrending stock. So BlackBerry's tech sector in an uptrending stock. You got 5 days overlap. Really, the past like 12 bars overlap. Is this really a great setup? I mean, there's kind of obvious resistance level here. These, all these five days are kind of in this bar shadow. After going back, just underneath the all-time high, and 1150 was definitely like resistance. But I think this was not an A+ setup by any means. So, my trigger was holding. Getting above the recent 3 days high, this kind of like level of 1150 intraday. I traded this, called this a flag right here, outside the past 3 days range, outside the actually. Let's see. So I'm a liar. So 1, 2, 3. So still in the past 3 days range. Would have kept me out of the trade if I followed my rules, but I didn't follow my rules. So, didn't do it. I'm also buying underneath prior resistance. Bad trade. Bad trade on my end. I'm not following my rules. Shop was the other trade I took. So I went long shop. I think this is another, as I talked to you about on Thursday, and like Weight Watchers, I had in my mind that, like, okay, 100 is going to be a huge breakout for shop. Like, I literally talked in my notes, like, don't miss shop at 100. So I've like already made up my mind that shop's going to be a great long once it gets to 100. And that kept me from being fluid and seeing the market as a whole, because I had already given myself such a bias. And so shop's tech sector, and been a long-term uptrend, recent trend actions, 4 days sideways. Closed up off the low on Thursday. So, all of the evidence was kind of leaning one way, but still it was like, what's going to happen once we get above 99.78? So where did I buy? I bought it right at this yellow line, or right at the orange line right there, just right as we broke above the opening range. I got filled at 50 cents. So 99.50. And then we broke out to 100, and everything was all right. But then change of character, and so I was not prepared for this scenario. Just let me just be straight up. Like, I wasn't prepared for failure, for like big wide range days all the way across the market. But the big picture is I'm still buying within the past 1, 2, 3 prior days range. So 99.50 is within the past 3 prior days range. So just not following my rules and not being a fluid thinker. My setup and shop. I think my setup and shop is fine. I'm sorry, I just had a cold lately. So I think my setup and shop is fine, but not just having a bias going in instead of just like being fluid, having plans of what could happen, I think kept me out of a lot of good trades today. And I think I lost money. One, because I'm not following my rules. If I followed my fucking rules, like, it would have kept me out of 2 trades, and then would have kept me more open to like trades such as this. So this is a fucking sushi roll now. So we trade up and we fail, so we get to the bottom of the range. At the bottom of the range, we here. So here's a flag, like maybe short right in there. And make some money. Another setup was Vive. Vive's in the tech sector. Wasn't a long-term uptrend. Intermediately had maybe an exhaustion gap coupled with a failure test in the background, so we get below this 63 level, kind of below nearby support. Shorter flag below that level, so that's setup trigger entry. I'm set up being weakness in the background, going sideways in an uptrend. Trigger being trading below the level, entry, bear flag. And, tell me if I don't short this bear flag, I'll risk. So we talk about my one trade today, risk 50 cents to make 6 to 1. So risk, $100 to make $600. That's the one trade I need today. AAOI, not as compelling, I think, as Vive. I think Vive was definitely, had more weakness in the background. AOI is in a strong uptrend, tech sector strong uptrend. But if we just go, past 5 overlapping days, that compression leads to breakouts. Excuse me. That, the setup being 5 days overlapping, we get below the 5-day low, trigger, short any consolidation, boom, short right there, stop there. So even if I call it risk $1, so risk 100 shares, make $600. So it's just like there were trades out there. I was not being fluid in my thinking, and certainly biased, and I didn't have a plan for if like for example, like shop fine setup, but I didn't have a plan for, hey, what if shop trades up? What if it fails? And then what if it comes all the way back to the other side of the range, and volume picks up, and we got a really nice intraday downtrend now? Then what do I do? So that's why I was sitting there holding my dick and like not making money on one of the widest range days, like across the market. So I think maybe it's a good example. Also, like Bella said, like some trades work sometimes. So this is an example where like the trade that's been working, like going long as we broke out to all-time highs, like stopped working. And so it was working actually maybe for a little bit, but the more important part I feel is I broke my rules on 2 trades. I broke my rules. It's not very good. I traded, I didn't trade A+ setups on Thursday, and so I'm not gonna have any longevity if I can't just follow my fucking simple rules and not trading within the past 3 days range, and I'm frankly embarrassed. So gonna give it a better effort coming in Monday, but fucking A, man, it's just has been a rocky start, but it's all on me. I'm the only one that controls my trading destiny. So anyway, later, dude.